Hello, everyone. Thank you for joining me this afternoon. Just want to pop on here real quick to provide a little bit of information to you guys. So, I want to talk about and give you some tips on 6 mistakes to avoid after you receive your mortgage pre-approval. So, for many of us, we worked really hard to get to the point where we received our mortgage pre-approval. And so, you don't want to get in a situation where all that hard work puts you behind, or you have to delay purchasing a home. And this could potentially happen. And it's not that you made this mistake on purpose, but it's just the fact that you just weren't unaware. So we're going to talk about that today. I'm going to go through each of these steps or tips for you to avoid when you get to this point. So the first one, applying for new credit. This is so important. After you receive your pre-approval, you have to remember that it's not all fine and done at that point. We want to make sure that your credit remains in that same condition it was when they ran that pre-approval. If you have your credit run again, and you get that credit card, it could change the pre-approval for you. It could change your credit score, and it could also change the interest rate that you were quoted as part of that home buying process. So you just want to make sure that you wait until the end before you decide to apply for any new credit. You can consider, if you are just wanting to kind of shop rates, then you can consider shopping rates at another mortgage company for about 90 days you have where it won't impact your credit score. But make sure that you have an understanding of what you're doing and why you're going to talk to this other mortgage company ahead of time before you make that decision. Step number 2, or tip number 2, is paying off debt. I know that it can seem like a really good idea to just go ahead and pay off that debt that you have. Well, if the lender did not tell you to do this, then just pay your monthly bill as you have always been doing. Because when the lender prepared your pre-approval, he was not only looking at your credit score, but he's also looking to make sure that you have enough cash reserves. A lot of the loan products will require that you have so much cash reserves. And so if you use some of that money that was sitting in the bank as your cash reserve, then that could not qualify you for your loan. So you want to make sure that you talk to your loan officer and go with the advice of the loan officer as to how they want you to handle that. Sometimes the way that your credit is set up, they need for you to make it as a monthly payment versus a lump sum, just because it has to do with the way that it's positioned, how you acquired that debt, the time frame on the debt. So they may need some additional time during that closing period, or when you find that new property, for you to continue to make those regular scheduled monthly payments. Co-signing on loans. This is tip number 3. You want to make sure that you are not co-signing for anyone's loans, especially while you are going through this pre-approval home buying process. It can seem kind of harmless. Oh, I'm just on here as a secondary person, because oftentimes, depending on where you go, if it's a car loan, people tend to twist information to a way that may benefit them. So you never want to just listen to them, hearing them say, oh, it won't impact your credit, you're just a co-signer. It can definitely impact your credit. Number one, that individual could skip a payment and not make the necessary payment, which in turn impacts your credit. And also it creates a new debt on your credit profile. So they're going to look at that as added exposure to you when they go about qualifying for your loan. Now, that doesn't mean you won't qualify for a loan, but it may reduce the pre-approval amount that they sent you. Now, I can go on and talk about the co-signing and when you should and when you shouldn't, because oftentimes I often will see people will co-sign for a friend of theirs and it just goes all the way bad. And what's sad about it is oftentimes you're the last person to find out as the co-signer that that individual you co-sign for is behind. Usually you find out when you go to apply for credit somewhere else where that account has already been charged off and you cannot do anything about it. So definitely something to think about when you talk about co-signing when and when we should and when we shouldn't. So tip number 4 is ignoring the lender request. Um, if the lender requests that you do something specific, you want to make sure that you're listening to that lender. He's giving you good, valuable information. So you want to make sure that you're listening and doing everything that they say to do. A lot of times it has a lot of time constraints on when they need documents, when they need for you to get information over. So it's very important that you continue to communicate with your lender and you send over the required documents early on. So, and this is important too if we're talking about a pre-qualification versus a pre-approval. You're always looking for that pre-approval. That's what you want to see, not that pre-qualification. That pre-qualification is really no good. It just kind of tells you maybe how much you can apply, be approved for. But that lender has not done a deep dive looking at your credit, your income. Again, you can work a lot of overtime. Now, I make good money, but sometimes we often see this for a lot of nurses. You work a lot of hours, a lot of overtime hours. But when you look at your pay stub, there's various different classifications on those pay stubs. And not all of those classifications can a lender use to qualify as income for you, as regular income. So they're going to look at prior year and then with your current year and kind of compare notes to make sure that that's something that seems like it's going to continue on. So the reason why a lot of lenders go with that pre-qualification is because they're waiting for documentation from you as the individual so they can get to that point to give you that pre-approval. The pre-approval is definitely what you want to look for. You want to work with that lender, make sure you're gathering and getting everything over as quickly as possible. Understandably that sometimes there are some delays because you need to get information from your employer and they're dragging their feet. But that through communication is understandable. But when you're just not doing what is asked, it creates a tight situation because you know what's going to happen. While you're supposed to be getting these documents over, you're still looking at houses, and then you're going to find the perfect house that you've fallen in love with, you've been dreaming about, and you're ready to put in that offer, but you have not submitted all of the documents to your lender for that firm commitment of that pre-approval from them, and it delays the ability for you to submit an offer, because when we submit an offer on a house, we are looking or we're submitting that pre-approval letter with the offer, and we don't want you to miss out on that dream home. So tip number 5, falling behind on your bills. Excuse me. So you want to make sure that you're keeping up on all of your bills. A lot of times it's not on purpose. It can become an accident where you forget to pay on a bill or two, like that credit card bill, a lot going on and you just forgot to pay it. But during this time of you're looking for a home, this pre-approval time, you want to make sure that you're keeping up on all of your bills. Maybe for the time being you do a auto payment where it's automatically deducted from your account, or you go on to your bill pay for your banking, whoever you bank through, and set up a bill payment so you don't forget about that. It's very important that lender, even though at the beginning of the transaction they are going to run your credit, they're also going to run your credit again at the end of the transaction. So they're looking for any potential hardships or anything that's out there, because you have to look, there's going to be an underwriter. That underwriter is protecting their job. They can't have high defaults on their profile, their work history record. So they want to make sure that they catch everything. So they're going to pull that credit report again. They're going to review it to make sure that there's no defaults or late payments on there. And late payments definitely do impact your credit score. So some of you may have barely made it, or we just made it to that pre-approval status. So we don't want to do anything that's going to jeopardize that and potentially have you lose your home, lose out on the home. especially if it's a time that you're ready to move and you need to move. So lastly, tip number six is losing track of deposits. It sounds kind of crazy, but oftentimes people will deposit money into their accounts. You want to make sure that you're keeping track of where all of these deposits are coming from. If it's coming from your employer, no problem. That can easily be tracked by your pay stubs. But we want to make sure that we are keeping track of any cash deposits that you're putting in there. As the month renews every month, and we're going through this pre-approval process, the lender is going to ask you for a copy or a new copy of your most recent bank statement. And if they see any unfamiliar deposits going into your account, they are going to ask you for some type of receipt or some information on where this cash come from. They do not like to see mattress money. So if you have money saved at home somewhere, where you just kind of keep cash on hand, you want to get that actually even before you start the process. You want to get that money into the bank because they're going to question that. They want to see where it came from, and they want to make sure that you have a solid answer for where that cash comes from. So even though cash is good, it can show that you have some additional reserves for the transaction. So they do like to see that, but they are going to want some answers as to where that cash comes from. So those are my 6 tips for how to avoid mistakes when you have a pre-approval. I hope you found this information to be useful. We can definitely help walk you through the process. If this is the first time you are joining me today, first would like to say thank you for joining me. I do videos like this all the time. I like to put out a lot of information and resources, so please like or subscribe to this channel so that you do not miss out on my next video. Thank you for joining me today. Send me a message if you have any questions. You can call our office at 216-220-7886. I am Andrea Wilson. I am your Northeast Ohio real estate broker and happy to assist. Have a good day, guys.